Hello everyone, welcome to today's video. My name is Jose Ricardo Tejaen, editor of the Prosperity Digest newsletter and also product specialist at Market Traders Daily. Today is Friday, May 10th, 2019, and we've been talking our team has been talking about several situations, and right now the media is focused on the trade, the tariffs, the US tariffs against China, and also at the same time what to expect on the markets. But there's a hidden situation, and we found what we think it's a way in that you can profit in the next 2 weeks and get up to $2,000, what we see as the end result of the trade talks between the US and China. And we do expect at some extension a partial deal, not a full deal, but a partial deal that would be benefit for the markets and will allow investors and traders to benefit of a risk on environment. Okay, do you want to know what that trade is about? Okay, so keep watching the video and I will explain step by step how exactly you can structure this trade for yourself, how you can do it, and I'll talk a little bit about what's happening in the tensions between the US and China. As usual, please keep in mind that this is in fact an educational purpose only video. However, the ideas, the scenarios, you might as well use them, but always understanding your risk profile and exactly that you can make money in any asset class as long as you measure your risk. Also, remember that past performance does not constitute future performance, okay? And at all time, you must be aware that investing and trading has a risk. And please make sure you do so with funds, capital, that in the event that you lose it, does not affect your day-to-day lifestyle. All right? So, having said that, let's go to the charts. Now, before I do that, I want to make sure something, just to give you a little bit of fundamental instruction on what is happening. So, the gargantuan amount of debt that China has can only be funded in US dollars. This is one of the reasons, and I'm not going to throw at you any numbers. There's no require. If it's a billion, if it's a trillion, that doesn't make any sense, because none of us has the capacity, partially, to have in our bank accounts, that number, those figures. So what you have to see here is the dynamics. Okay, so in one extension, this is what we have to do. In one extension, you have China, which has been growing double digit, now is landing, looking to go into a soft landing, trying to shift from a hyper manufacturing state economy to more in-house consumption. That's extremely challenging. Now, as I said before, the gargantuan amount of debt required to get to this level for them can only be funded in one of the most, if not the most liquid currency, fiat currency out there, the US dollar. Therefore, they need the US, and it's in their best interest, not only for the US, but also for China, to find a prompt solution to this dilemma. The tariffs, the war, finding common ground. Now, on the other hand, if we want to take a look at what happened next, the U.S. also has been running we call the twin deficit. The U.S. is fighting to keep themselves relevant in today's economy, and at the same time, they need to find a way to work with one of the biggest partners. Again, if not the only partner that can sustain growth, the growth of a lot of the household names in the US. There is in fact evidence that indicates that few companies names in the US, they sometimes take up as high as 60% of their revenue from selling products in China. So there is a relationship when it comes to the commercial trade that is imperative for both nations to keep going. Now, the key catalyst, the variable here is this man, Donald Trump, the current president of the United States of America, because now in 2020 he's looking for re-election. Why not? He is going to look to keep the power as long as he can. So definitely he's be running. So is it convenient for him to have a sort of like a market crash before his re-election, considering that he has been selling himself as one of the biggest or best businessmen in America? Of course not. So you have to position yourself into that. So our team, we're betting, and our expectation is that in the next 2 weeks, they will come to an agreement, and that will provide investors and traders with enough ammunition to take risk once again. Volatility has been a little bit slowing down, peak in the last 2 weeks. But for example, the currency I'm taking a look, it's probably one of the most hated right now. It has been shorted. In previous videos, we talked about the euro versus the New Zealand dollar, a particular cross. It's almost 450 pips from the moment we published that video, and we expect to make as high as 3,000 pips. But in the short term, there's a way that you can take home up to $2,000 trading long the euro versus the US dollar. So having shared all this information, now let's jump into the charts, take a look what's happening right there. And here is. Now I'm taking a look. I have the euro versus the US dollar, then I have previously, as discussed, we are already in the money plus 450 pips. Happened about 4 or 5 weeks ago. Also have other asset classes, WTI, the Dow Jones, and gold. Now, of course, as I mentioned, if in the next 2 weeks it comes as we expect, as Marketers Daily team expects, we expect this deal to come into full realization. It might not be a full deal, might be something in between where both nations, the US and China, define common ground that will be perfect for the markets. These will translate into a weaker US dollar weakness and rallies in the equity markets, from the Nikkei 225, the S&P 500, the Dow Jones, the DAX. You mention it, okay? But let's start on the monthly chart. Where are we with the euro dollar? Now, this week has been at the beginning of the week until yesterday, after Jerome Powell's, the Fed chairman, comments. The euro versus the US dollar was in a tight range from high to bottom, from the high to the low of only 52 pips. That's absolutely nothing. So right now, if, as I mentioned, the trade talks in the next 2 weeks come to a settle, they settle the game and everything, and they come to an agreement, this currency US pair will definitely rally, and we want to take advantage of that. Now, right now, if I were to consider that the low has been established for the time being, 111.10, I do the whole extension from 125.70 estimated, and my first target will be using this Fibonacci. Look that I don't have any moving average right now. I'm just looking at the raw figures and establish my areas where I'm going to work. Now, my first target would be definitely 114.57, but keep in mind, when you work with Fibonacci, trend Fibonacci, your two most relevant figures, 38.2% and the 61.8%. Now, in between, there's some profit taking because the euro as well, they have their own issues. So I'm looking at least at the beginning 114.50. Of course, from this point, if I take this, we're trading at 112.33. We're talking about 115 pips. Now, to the upside, I'm looking for 216 pips and continuation of the trend, a recovery story where finally there's again the calm comes to waters. Everything is going well for both economies as far as negotiations. They already have a trade deal in place. Then I'm looking at continuation and a story, full recovery story all the way to 116.67. Where once again I will reconsider, because this is a key level in Fibonacci where we must expect profit taking. Okay, so how it really looks. This is how you can make up to $2,000 in the next 2 weeks. Well, I'm gonna take one standard lot, okay, and I'm gonna show you what I'm doing. Remember, this is how I'm doing this for educational purposes only. You can do it with a different risk. It can be lower, it can be higher. It depends on the capital you have. Remember, always understand your risk profile and see if the idea is suitable your trading approach. Okay, I always love to take notes. Right now the low of the day is 112.10 and I'm looking for the monthly low. Monthly low is 110. It's 110. 111.10. I got it. Okay, perfect. So I'm going to use my stop loss, 111.10, and I'm looking for 114.50. Okay. I have my order in. As you can see, I'm risking, let me see if we get it here. Okay, I'm risking $1,264, and I want to expect to take home $2,136. Almost a 2-to-1 risk-reward ratio. Now, other ideas, other money management, risk management techniques, depending on your profile, let's say you want to take one lot and divide it into 2 lots. You will do half a lot, and you can manage your position accordingly. In this case, the next idea that I want to provide into this environment is, what if you have enough capital to risk? Remember, always trade with funds. If things don't go well, it means you don't make money or you lose money. It won't affect your day-to-day trading, your day-to-day lifestyle. Okay. Now, I want to take a second trade because let's say I have enough capital. This is my second trade, and this is the one I will close at a part. Will let go if things go well. The first trade will close here, and I'm looking to target 38.2% monthly. See, I can have it in my nose. 671. Can't have it. Too many. Let's just remove the target. And 116.70 at 116.70. Okay. Same. I'm going to start with 111.10 as my stop loss. The monthly low of May. Just going to have it here. 116.70, and I'm adding my position. Okay. So in this case, again, I will be taking something similar as risk, but then my profit estimation. Let me put it here. Let's have it here. Will be $4,335. That I'm not expecting it to happen in 2 weeks. It could take more time. But since you already are in the profit on the first trade that, as I mentioned, we estimate that in the next 2 weeks, you can profit up to $2,000 from the US-China trade talks. And that's what we have. Your risk, you have it here, will be at least with one standard lot, you're looking to risk $1,264. Your initial target, the 23.6%, where it's basically a resistance level, we expect profit taking. It will yield you $2,000, $2,136 estimated. And if things keep going, if there's a continuation in the recovery story of the euro versus the US dollar, thanks to they settle the score. There's peace between the two nations. That will boost volatility. It will increase volatility. Traders and investors will feel confident. They will have everything in place, and the trading environment will turn back into risk on, and they will take risk. And what a better currency to do that right now than the euro versus the US dollar? Several reasons, as I described in other videos, but this is the trade idea. This is a scenario. Like I said, if you like these videos, please go ahead and click like in the video. Make sure you subscribe to our channel. Every week, our team at Market Traders Daily we truly work to produce the best trading ideas that you can find. And absolutely, the last invitation I want to make sure you know about. Most of the situations, a little bit of the information we read from different outlets in Asia, invite you also to the source. Where we get all these trading ideas, the basic concept that we use. Well, it's from our chief head of currency trading, Ross Mullins. And this is his channels, Ross Mullins, in YouTube. And you have it here, Ross Mullins. And on daily basis, he makes sure to provide low risk, high reward trading opportunities in the currency space. And every day he will go and analyze the US pairs. And this is exactly how we establish our levels, because the main thing he always shares with subscribers is make sure that if you want to make money in the markets, it doesn't matter what it is, you have to buy low, sell high, you sell high, and you buy low. That's all it is. And judging as where we right now, as you can see right now, historically speaking, all the way from 2014, we are at a very important low in the euro versus US dollar that moved the odds in our favor to make at least $2,000 in the next 2 weeks as the US and China trade talks settle. Thank you for watching. Make sure you come back every week for more videos of this type, and I wish you happy trading and a good weekend.